Hi guys, how are you? Mine this one Titanium. Welcome back to Investing MMT and Pure MMT for the 100%. Let's talk about the fake MMTers and let's talk about the dollar. The the new thing now is that we can pay for everything. We can just pay for everything, just printing. Okay, this is what the fake MMT political marketing campaign is all about. How are we going to pay for it? Well, we just print dollars. Don't worry about it. No, that's not the way it works. Okay, the act of printing does not create value. Taxation, because we tax, we can value the currency. No, because if you go to the Middle East, all of the Middle East does not tax. Okay, they don't have a problem with their currency. In fact, their currency is pegged to the U.S. dollar. So the act of printing is not value. If I print a dollar and there's no production, there's nothing, you can tax it 100%, you won't give it value. You can raise interest rates to 100%, won't give it value. You can sit here and pay for all unproductive jobs on the planet. It won't give it value. You can change what you call it. You want to call it reserve, call it reserve. You want to call it M1, M2, M3, tax credit, tax debit. You want to call it horizontal money. You want to high-powered money. You want to call it net financial asset. Not going to value it. Nothing is going to value it. The only thing that's going to value a currency is the productive output of that economy. This is the only thing in the economy that matters to the dollar. Any economy on the planet in the history of mankind that does not have a productive output, and they print, guess what happens to the value? It goes to zero. Okay? It's that simple. So when people are coming up, these fake MMTers are coming up and they're saying, hey, don't worry about it, we can pay for it. How are we going to pay for it? Well, we're just going to print money. No. No, that's not the way it works. So when fake MMTers come out and they say, look, we'll just print money and we'll create jobs. What kind of jobs? What unproductive jobs? The kind of jobs where you just go up to the lamppost and you're a guard. You're just a guard, you're sitting there, you're protecting and you're guarding a lamppost. That's a job. You get 31K for that. That is not going to value a currency. If you're just going to print dollars out of thin air to create unproductive jobs and the productive output for profit jobs do not increase, then the currency will devalue. And if you have any doubts about that, any whatsoever, I want you to go to Turkey. Okay? Because Turkey right now is going through what? A collapse of their currency. They have 10% unemployment, they print money, they borrow money, and they import. So what happens? The currency devalues. So when you have the fake MMTers running around saying, look, we can create all these jobs for these 9 million people, it's going to cost $550 billion. Okay, $550 billion. And then we hit a recession. Now we increase that by 3 times. Now we have 27 million people. $1.5 trillion of unproductive jobs. Sit there and guard the lamppost. Peel some gum off the sidewalk. Plant some flowers. Yeah, that's it. Keep doing that. Let me let you in a little secret. Public purpose does not mean productive output. Public purpose is a designed little phrase that the people talk about so they can get you to print more dollars that are useless jobs. They want to give spoons to those with shovels. Okay? So, don't give me this, what's the public purpose? No, that's not the way it works. Anytime the productive output is removed from any currency, I don't care what it is, the value will drop. That is Forex. If you want to trade Forex, you best fucking understand that. And if you don't, then you're going to get your ass handed to you. So when Natasha Kelton and all these little academics that can't even figure out that we're near full employment trying to sell air conditioning units in the Arctic, when these people tell you, hey, don't worry about it, we can pay for it for this, and we'll take care of the 9 million people. Well, when you devalue that currency, you're going to fuck 100% of the people, which is 330 million people. All right? That is economic reality. So if you want to create all these unproductive jobs that sit there and do absolutely nothing for the economy, and you think you're going to do what is morally correct, then I'm going to let you in a little secret, another one. That all these 31,000 that are going to go out to unproductive jobs are going to go into the savings bubble. That means those dollars will not be saved by the people who are on the job guarantee. Those dollars are going to be spent and they're going to end up in the savings bubble in the top 5%, and those people are going to go out and they're going to buy assets and they're going to speculate with them and they're going to push up asset prices, and that's where the inflation will take place. If job guaranteed worked, you can take this idea, go in the middle of fucking Africa, Congo, Bangladesh, I don't give a shit where you go, any third world country, and say, hey, look, we're just going to print up money and we'll just have people sitting there peeling gum off the street and guarding lampposts, and the economy is going to boom. Why don't they do that? Because if the Bangladeshi Dhaka is 76 to $1, you know where it's going to go? It's going to go 176 to $1. Because over the course of time, more and more people, they're not going to like their boss. You know what they're going to do? They're going to start shrinking and shrinking and shrinking the productive output of the economy. Everybody's going to be like, fuck it, I can go over here, work for the government, not get fired. I got no obligation. They have to give me a job. And this is going to shrink and shrink and shrink into nothing. And you know what's going to happen to all the other people in the economy? The other 320 million? They're all going to be destroyed financially. Everything that it took 200 years of capitalism to build, to make us the biggest economy on the planet with 5% of the world's population, producing 25% of global GDP, with the highest standard of living of anybody with a population of 330 or more, will be wiped out. Because it's not just the government deficits that are going to kill you. You know what else is going to kill you? There's going to be all these dollars that are going to be borrowed against that 31,000 that are going to go right into the functional economy, and then it's going to go right into the savings bubble and further devalue the currency. And you know what the MMT solution is for that? I'll tell you what the MMT solution is for inflation, which is the limiting factor in real resources. You know what the outcome is? Austerity. Austerity. We're going to kick everybody off of a job guarantee. We're going to raise taxes. We're going to cut costs, cut spending, okay? And we're going to raise interest rates. And if you're going to sit here and tell me, well, look at Japan, look at Japan. You want to talk about Japan? Okay. 4 decades that are lost. That's Japan. 300% debt to GDP. And by the way, Japan is an exporter, not an importer. So as we all know by now, MMT has no solution for Venezuela, no solution for Argentina, no solution for Turkey. They only have excuses. Well, it's foreign debt. Foreign debt, really. Turkey's outstanding international public debt securities to GDP is 8%, 8.32%. Turkey government debt to GDP is 28%. So where is all this foreign debt? Every single country on the planet has foreign debt. So that means MMT doesn't apply in anything. So clearly public debt is not the problem. You know what the problem is? Private debt to GDP, not public. Private debt to GDP is 170%. But according to MMT, hey, it's horizontal money. Oh, assets equal liability. Don't worry about it. It's horizontal money. Not a problem. No, it is a problem. And it's a very big problem. And this is where it all comes down to. That anytime you talk to a fake MMTer, you know what they're going to do? And you talk about any other country other than the U.S., right? Because MMT is about all economies. It's not about just the U.S., right? But not to them. Anytime you talk to them, they're going to say, well, in the U.S. Well, no. You cannot use that in the U.S. because the U.S., under capitalism, has afforded you the ability to talk nonsense. It took us 200 years to build an economy that is the greatest in the history of mankind. Okay? And now, because we are so strong, now you want to use that little credit card of the US and destroy it from within by creating unproductive socialist jobs. And not the good kind of socialism, the bad kind. The kind of socialism that destroyed the Soviet Union, the kind of socialism that destroyed Venezuela. So the next time you show me this little gay chart of Secretary of Financial Balance is the percentage of GDP, and say, look, oh, deficits equal private sector assets, la 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 la, and all this bullshit, the reality is the top chart, okay, where all deficits end up in the savings bubble, and those dollars are taken and speculated with on various different asset prices. And all those little deficits of 31,000 that you want to sit here and boost to everyone and say, yeah, yeah, don't worry about it, this is good, this is morally correct. You know what it's going to end up doing? Exactly what it has done for the past 40 years. As you can see in this chart, the red line is government deficits and the blue line is corporate profits. And they're going to continue to pump higher and higher and higher by using the job guarantee as a middleman to funnel more and more deficits to the top 5%. And using your definition of neoliberalism, nothing can be more neoliberal than what you guys want. All you little fake MMTers there with your MMT party bullshit. Because no one on the job guarantee is going to save 31,000. They're all going to spend it, and it's all going to be dis-savings from the household, and it's going to be profits for the corporations. And those profits end up in the savings bubble, and they go into asset prices, and they keep boosting up those asset prices. And what used to be a high end in a stock market of 14 PE, price to earnings, today it's laughed at. It's a value to buy at 14. Today it's 28. So you want to listen to Natasha Kelton? Go right ahead. That's it for now. Take care. Bye-bye.